So next, after assessing flood control risk, so again, we determine the extent of test of controls in sales transaction. So ito sales muna. So we have separate set for cash receipts. Okay, but often, similar lang naman, no? Which is more on verification of documents. So sa sales transaction, these are some examples of test of control. But then again, class, these are not exhaustive. So itong list na to, these are just typical examples of test of control that we can perform over sales transaction. Pero yung combination of our test of control could really depend per client and the nature of their businesses and documents. For example, yung test of control mo sa client that employs a manual accounting system would be different from the test of control that you will perform to a company that is highly automated. Nakuha? Kaya dito, examples, no? Examination ng mga customer order for evidence of credit approval. So in this case, pwedeng ang population mo is yung mga sales order or customer order, and you will identify whether there is an indication of approval or not before it was processed. Another example, we have examination of sales invoices for supporting document. So in this case, ang population mo is yung total sales invoices issued during the period. And you have to check whether appropriate supporting documents for each sales invoices. May checklist ka. Dapat each sales invoice would be supported by shipping document, would be supported by an approved sales order, and or customer order as applicable. Next, another, you can also observe whether monthly statements are being sent to the customers. You can also account for sequence of documents. Halimbawa, sequence of sales order, or kaya sequence of shipping documents, or sequence of sales invoices. And then finally, you can examine also yung prices in the sales order if it is in accordance with the approved price list of the company. So kasi part din yun ng control, no? Dapat yung mga prices, terms in the sales order are authorized. And one way to check that, if the price used in an order of a customer is in accordance with the approved price matrix or list of the entity. So that is another test of control that we can perform over sales transaction process. So we design our substantive test of transaction for sale. So yung test of transaction naman, class, usually we have to design test of transaction per audit objective. So dito ang relevant, class, yung mga tinatawag nating transaction-related audit objectives. So yung mga transaction-related audit objectives, these are our audit objectives applied in audit of class of transactions. Now, halimbawa, we test, sound check. So again, as we were discussing earlier, so these audit procedures are just common examples of audit procedures that we can perform per audit objectives. So although, as you can see later on, there are some audit procedures that will be repeated in other audit objectives. So because we know that some audit procedures can satisfy multiple audit objectives. So that is why in practice, instead of per audit objective, when we prepare our audit programs, so kasi yung audit programs, it contains the specific instructions in performing our audit procedures. No? So instead of per audit objective, what happens is that we prepare our audit program in performance format. So wherein the audit procedures are listed. So those audit procedures that will satisfy more than one audit objectives are just listed once in that performance format of audit program, so that there will be no duplication of tasks or audit procedures when we execute them. So in here, so just to appreciate the audit procedures that we will be performing in each audit objective, that's why this is how it is presented here. So for example, the first one, the objective is whether the recorded sales occurred, or this is under the occurrence audit objective. There are three main concerns in auditing this objective. First is whether sales included in the journals for which no shipment was made. So meaning to say, the client recorded a sales, but no shipment has been made yet. So our audit procedure that could be vouching. So for example, we will sample entries from the sales journal of the client and vouch for the supporting document. So let's say we saw an entry in the sales journal dated December of 2022. And then when we look at the supporting document, there's no shipping document yet, or let's say there's a shipping document, but the shipping document is dated January of the following year. So that means the sales has not yet occurred by December 2022. So resulting to what? Overstatement in sales. So similar in the second one, so sales were recorded more than once. So meaning, for the same shipping document, it was recorded twice in the sales journal. For the last one, there were shipments made to non-existent or fictitious customers and recorded as sales. Now, the first two objectives, sales included in the journals where no shipment was made or duplicate recording of sales, could arise from either error or fraud. But the third one, shipment made to non-existent customer, this will always arise from fraud. So that is why it's tagged here as FRF, or fraud risk factors. So that is why when we perform our audit procedures, we should be mindful, no, or alert to circumstances that might result to material misstatement arising from fraud. And then, another audit objective, existing sales transactions are recorded. If this is the audit objective, then in this case, our audit procedure would normally be tracing. So this time we can start from the shipping document. So let's sample shipping documents dated within December of 2022 or the current year under audit, and we will trace it in the sales journal. So because if there is a shipment, let's say dated December 2022, and it's not yet entered in the sales journal, so that means naman that the sales are understated. So however, in auditing income and assets, usually the tendency is for the client to overstate, no, the assets and income rather than to understate. But nevertheless, we will still include some audit procedures to validate completeness, although our audit emphasis is on occurrence and existence. Next, another audit objective that we validate is whether sales are accurately recorded. So to validate whether sales are accurately recorded, so what we do is we check the computation. We can verify the computation in, let's say, in the invoice or the sales journal. Or we check the billing of the client through the sales invoice and whether the amounts are correctly reflected in the accounting records or in the financial statements of the client. So other audit objectives now include whether sales transactions are correctly included in the subsidiary record and are correctly summarized. So we can trace entries from the sales journal to the ledger. Like for example, to the AR subsidiary ledger and AR general ledger. So another recorded sales are correctly classified. For classification audit objective, this is usually not a major concern in audit of sales. So because for most companies, there's just one category of sales or revenue transaction. But for some companies that have, let's say, multiple business or product lines, like for example, let's say, conglomerate with different segments where disclosure per segment is required under the standard, then this category or this audit objective would be relevant to them. Okay? Another, sales are recorded in the correct dates. So this one naman, our procedure would be cut-off. So in particular, sales cut-off test. So during our sales cut-off test, we will sample entries recorded by the client near or at year-end. For example, from the sales journal, we will sample transactions recorded December 2022 and January of the following year, and vouch for the supporting documents. So whether the supporting document no support for the recording of the sale on the period that they were recorded. So let's say for December sales book or sales journal, the entries in the December sales journal should include shipping documents that were actually shipped in December. Or for the sales journal recorded in January, so they should include the shipping documents for goods that were shipped actually in January of the following year. And if the goods are in transit, we should check the shipping term. So if it's shipping point or destination point to determine whether that is already a valid sale as of December 31, 2022 or by December 2022 or for the following year. Next, for test of control and substantive test of transactions naman class for cash receipts, usually it follows the same audit objectives as for the test of control and test of transaction for sales transactions. No? However, in this case, we'll just highlight some emphasis when we audit cash receipts. Now, we will not repeat anymore yung kanina, yung mga audit objective for cash collection kasi nga similar lang with sales. So, ang difference lang, yung evidence natin or documents to test is directed at cash collection. So, emphasis lang natin itong concern wherein to determine whether cash received was recorded. Kasi most risk in the embezzlement or misstatement of cash collection occur before the cash is even recorded in the books. So mataas yung risk of not detecting material misstatement if the employee or the personnel has embezzled the cash even before it was recorded in the books or records of the client. Okay, if we suspect that that happens or the controls over cash collection or cash handling is weak, the audit procedures that we can perform is to prepare proof of cash receipts, or to detest or test procedures to discover lapping. Example nun is confirmation with customer. So kasi if there is a lapping procedure or lapping scheme being employed by the personnel, so lapping is where the client personnel collects cash from one customer and embezzles the cash received and delays the posting of the payment of that certain customer until another customer pays the company. And when another customer pays the company, that personnel will post the payment of another customer to the first customer to close the account of the first customer, and that will goes on and on until the personnel can pay back the company for the cash he or she embezzled, or worse, make an effort to conceal the shortage. Like for example, by effecting an unauthorized write-off. So in case the personnel does not have a plan to repay, for example, the company for the cash embezzled or misappropriated. Okay? Next, for audit naman for uncollectible accounts. So we mentioned earlier that for this class of transaction, it could be material for some companies or not for some companies. So, but in case we tag uncollectible accounts class of transaction as material, our audit emphasis is on the possibility that the client personnel can embezzle cash receipts and conceal it by effecting an unauthorized write-off. So, kasi just like collection, write-off of receivable would also result to credit to AR. Now, normally that occurs if the client has inadequate controls over cash handling, like lack of segregation of duty. Like for example, the personnel who is responsible to collect cash is also responsible to record the cash receipts. So that is why we highlighted earlier in our discussion of internal control that as much as possible, those two functions should be segregated. So in this case, our audit test will be to determine whether the write-off is properly authorized. So we can refer to, for example, the uncollectible accounts authorization form to determine the proper authorization of the related write-off. Then after we have established that the write-off is properly authorized, so we can now verify whether the client personnel has properly written off the receivable from the records. And also to trace whether it is properly posted in the ledgers such as the AR subsidiary ledger and general ledger. Now, after we have audited sales and cash receipts, we now turn our attention to test of details of balance naman. This time, we will audit what? AR or accounts receivable. Now, in audit of AR, so these are generally the steps that we follow. First, we identify the significant risks and assess the risk of material misstatement for AR. So remember earlier in our discussion, we by default now we tag revenue recognition as a source of significant risk in almost all of our audits. So because of the reasons that we discussed earlier. And then we set our performance materiality. So this is the materiality allocated for audit of AR and sales. And we use that materiality to evaluate the results of our testing. So then we assess control risk for sales and collection cycle and design and perform test of control and substantive test of transaction for sales and collection cycle. So these 3 and 4, these are the same things that we discussed earlier in the previous slides. And then we have to design and perform our substantive analytical procedure. This time class, the substantive analytical procedures would be applied to both classes of transaction and account balances. So kung yung test of control and test of transactions, these are applicable to sales and cash collection, the analytical procedures applicable to sales, cash collections, and AR. And actually, the result of our procedures from test of control, test of transaction, and analytical procedures will determine the extent of our procedures in testing the balance of AR. So since we have already discussed these steps 3 and 4 earlier, we move to step 5, our analytical procedures. Analytical procedures for sales and collection cycle include the following sample tests. So for example, we can compare the gross margin of the client in current year versus prior year. So if the company did not fundamentally change its operation or business, so we can expect that the gross margin percentage from previous years should be relatively the same or of the same level with the current year. So in case there are significant difference or unusual trend, then it could indication of overstatement or understatement in both sales and receivable. So another, we can compare the client's sales per month in the current year versus the prior years. So the sales should peak or trough relatively similar to what happened in prior years or previous years, unless there are significant events or circumstances that would explain the reason for differences in trend in prior years. Then we can also compare individual customer balances above a stated amount. So let's compare customer balances above 100,000 or 200,000 in current year and previous year. And finally, we can compare aging of receivable or category. So as a percentage of each category to the total sales or revenue or receivable rather compared to prior years. So this one naman, we can use this to test the reasonableness of the balance or levels of the allowance for doubtful accounts. So these are just examples of analytical procedures, and usually the result of our analytical procedures will determine also the extent of our test of details of balances for AR. So because class, if the result of our test of transaction, test of control, test of transaction, and analytical procedures are satisfactory over sales and collection cycle, then it could result to fewer substantive tests of details of balances in AR. And this is particularly helpful in audit of the revenue cycle because of the volume of transactions involved in the revenue cycle. So kaya kung wala na yung nakitang mga significant differences or unusual trend, it will really result to time savings and efficiency in audit. So kasi when we perform our details of balances over the AR, so we can use less sample, or we can perform interim testing, or we can obtain reliance from our alternative procedure such as the analytical procedures. But of course, we still have to perform some level of test of details of balances regardless of the result of our prior procedure. Now here, in terms of details of balances, we just have some examples here, again, arranged per audit objective. But we will highlight later, after we have listed typical examples of test of details of balances over AR, we'll discuss the primary audit procedure, which is the confirmation of AR. So here we have this audit objective that the AR balance per subsidiary record agrees with the balance in the general ledger. So normally this is one of the first procedures that we perform in audit of any account, not just AR. So one of the first steps that we do when we audit an account or FS line item is that we compare the balance per trial balance which will appear in the financial statement against the related subsidiary record. So kasi in case they are not tally or they are not balanced, then that would indicate weak internal controls and possible misstatements. Next, we have recorded receivable excess. So this audit objective satisfies the existence assertion of our client. And actually, this is the primary emphasis in the audit of AR. So since AR is an asset, so wherein the potential misstatement is toward possible overstatement. So yung primary procedure natin here is confirmation of AR, which we will discuss in detail later. So let's just look at the different audit procedures that we can perform in the audit of AR. So we have this one, existing AR are included. So this one naman relates to completeness. So in this case, our audit procedure could include tracing. No? So tracing, for example, so whether the balance in the subsidiary ledger or the entries in the sales journal are posted in the respective ledger. We can also perform analytical procedures to compare the balances of the AR with prior year or prior period. So next, AR are accurate. So this relates to accuracy audit objective. So in this case, what we can do is to confirm the receivable, compare the amounts recorded in the ledger against the amounts confirmed by the customers. So cut-off of receivable, so similar to what we discussed kanina, we can perform cut-off procedures. So determine whether the transactions are recorded under the correct accounting period. And then we have AR is stated at appropriate valuation. This one is relevant. So because AR is required to be measured at what? Realizable value. So which is the gross amount of AR less allowances, like allowance for doubtful accounts. So normally our procedure here is determining the reasonableness and the appropriateness of the level of allowance for doubtful accounts. So this one, our procedures with relate to valuation normally include testing the reasonableness of allowance by looking at the aging of the receivable, history of payment of the customer, and bad debts. Next, AR is properly classified. So we can review the AR subsidiary ledger for material balances and identify items that should not be included in the AR. For example, non-trade receivables. If there are non-trade receivables or interest-bearing receivables included among the AR, it would result to classification misstatements and should be included from the AR balance. And oftentimes, the audit of classification of AR is done in conjunction with audit of presentation and disclosure. So then we have client has rights to accounts receivable. Now, one common business practice is to use receivable as security or collateral for loans. So that is why some of the tests that we can perform here to establish the right of the client over receivable would be to discuss with the client management, inquire them whether certain receivables are used as security or collateral for loan or debt. We can also review the minutes of meetings of the board of directors because in case the client will create a certain indebtedness, so it normally will be discussed by the board and it will be included in the minutes of meetings. We can also review debt contracts or covenants or agreements with creditors. And then finally, AR are properly presented and disclosed. So in this case, for disclosure, we can review the client's accounting policy over revenue recognition because significant accounting policies and estimates are required to be disclosed in the notes to financial statements. Actually, in the financial statement, there is a separate note item related to significant accounting policies and estimates made by the management. So we can also review receivables from related parties. So because that would also be required to be disclosed in the financial statements separately. So those are some of the examples of test of details of balances that we can do per audit objective. So but then again, as we mentioned earlier, one of the primary audit procedures over audit of is what we call confirmation of account balances. So we confirm with the customer. Now class, we prioritize the evidence confirmation with customer because of its reliability. Okay, why? So because The evidence arising from confirmation with customer comes from independent third persons or parties. So who are the customers of the client? So that is more reliable generally compared if we audit internal documents such as sales invoices and shipping documents. Now, in confirming AR, the primary assertion or audit objective being satisfied is existence of AR. However, confirmation does not address completely or directly the valuation of AR. Kasi when we confirm AR, what we just confirm is the gross amount of AR. And what is important in the valuation audit objective is the reasonableness of allowance for bad debts. So that is why if we want to test valuation, aside from confirmation, we also have to test the bad debt expense or uncollectible accounts of our client. So going back to confirmation of AR, there are different types of confirmation. So the most common one is positive confirmation. In positive confirmation, we send a confirmation request directly to the customer of our client, indicating the amount of the client's receivable against that customer. Now, to complete the procedure, the customer should respond, indicating whether the amount included in the confirmation request is correct or incorrect. If it's incorrect, we ask the customer to provide documents or evidence that will support their contention. Okay? So therefore, regardless correct or incorrect yung balance in the confirmation, to complete the procedure in the positive confirmation, the customer has to reply. So kung hindi mag-reply si customer, we cannot complete the procedure on confirmation. So example, we send a confirmation to customer. We will tell the customer, dear customer A, is it correct that you have a 100,000 balance with our client, for example, XYZ company, as of December 31, 2022? To complete the confirmation process, the customer has to reply, yes, that is correct. We have a 100,000 balance with XYZ company. So that will support the existence of receivable of the client towards that customer. Or if it is incorrect, the customer has also to reply, no, that is incorrect. Our balance is only 90,000 pesos. We already paid the 10,000 pesos. Here is the proof. Then they will attach OR or other supporting documents. Okay? So that is why when I was still working sa auditing firm, I know if there are discrepancies. Kasi pag bumalik yung confirmation reply, medyo makapal siya. So ibig sabihin maraming nilagay na mga supporting documents yung customer to support a different balance. In practice kasi, normally yung confirmation, traditional pa rin. We still use snail mail. No, but right now, acceptable na rin yung mga electronic confirmation. Like for example, by email, but we still complement it with traditional mail. So parang yung email, more of advanced copy siya. Now, there's another type of positive confirmation called blank confirmation. Now, in a regular positive confirmation, if you remember, we include or indicate the balance of the AR, right? In blank confirmation, we omit the balance of the AR. By the way, class, yung positive confirmation, it is considered a reliable evidence as to the existence of the AR. So because again, the evidence comes directly from a third party or independent party. But the disadvantage of having positive confirmation or the regular positive confirmation, sometimes the customer would not verify the amount in the confirmation request. So they just sign or respond to the confirmation request without verifying whether the amount is really the amount indicated in the request per their record. So let's say we wrote a confirmation request to a customer. Dear customer A, is it correct that you have a balance of, let's say, 100,000 with our client XYZ company as of December 31, 2022? Yung customer, without verifying their record, they just thought that they have an order with our client. They will just sign the confirmation request without really checking whether 100,000 pa talaga yung balance nila or the different amount. So let's just sign it and send it back to us. So kasi at the back of their mind, may order nga kami dyan kay XYZ. So So tama siguro yan. So pipirmahan na lang nila. So pero pwede ba yung amount per record, di pala 100,000, baka may 95,000 na lang pala, or 115,000 pala. So that's possible. Okay? So that is why, to gain more assurance, the auditor might use a blank confirmation instead. So ano yung blank confirmation? Blank as to amount. So therefore, you ask the customer, Dear customer A, so how much is your receivable with our client, XYZ company, as of December 31, 2022? So the difference this time is that the amount is not indicated. So what will happen on the part of the customer? They'll have to refer to their records. And once they saw in the record, it's 100,000, they will fill it out and send back to us the confirmation request. So therefore, class, between positive confirmation na regular and blank confirmation, which is considered more reliable? Blank confirmation. So blank confirmation is considered more reliable compared to a regular positive confirmation. But what is the disadvantage naman of blank confirmation? The disadvantage is that we can expect fewer replies. Why? Kasi this time there is an additional effort on the part of the customer to fill out the information. So that is why if you're an auditor, you have to use judgment to balance the benefits and disadvantages of a regular positive confirmation and of blank confirmation. And then we have a least popular type, hindi siya masyadong nadidiscuss sa mga references, called invoice confirmation. Yung invoice confirmation naman, class, this is used to validate individual transactions rather than AR balance. Kasi what we include in the regular positive confirmation and blank confirmation is the ending balance of AR. So after nung opening balance, total sales for that customer, less payments of that customer. So sa invoice confirmation, we confirm an individual invoice. Dito ang objective natin is not to validate the ending balance of AR, but rather to validate terms, contracts, or agreement between the company and the customer. And then, finally, we have negative confirmation. In negative confirmation naman, class, we ask the customer to reply only if there are discrepancies. So, meaning to say, if the customer did not respond or if the customer did not reply, then we assume that there is no discrepancy between the record of the client and the record of the customer. So, kaya yung negative confirmation naman, class, it goes something like this. Dear customer A, is it correct that you have a 100,000 balance with our client, XYZ company, as of December 31, 2022? If the amount indicated is correct, no need to respond. But if the amount is incorrect, so please send us the correct amount, including supporting documents. Now, negative confirmation is considered less reliable compared to positive confirmation. Why? So kasi this time, in case there is a non-response, it doesn't constitute a direct evidence of existence of AR. Because many things could have happened why the customer did not respond. For example, it's possible that the customer did not receive the confirmation request in the first place. So naturally, they will not respond. Or they might have received it, but they disregarded our request. So therefore, non-receipt of reply from customer doesn't constitute direct evidence of existence. And because of that, we can only use negative confirmation after certain situation or circumstances are present or conditions are present. So there are certain requirements. So what are the requirements for us to use negative confirmation? So since it is less reliable, we can only use negative confirmation if the risk of material misstatement is lower. So meaning to say, we expect lower exemption rate. So if the risk of material misstatement is high, then we cannot use negative confirmation. Another requirement, class, is there is a certain characteristic of the receivables where we can use negative confirmation. So we can use negative confirmation when the accounts receivable is comprised of large number of items with small individual balances. Like for example, the receivable is made of large volume, but individually the balances are small. That's where we can use negative confirmation. So if the client has a small number of receivable with individually significant balances or large volume of receivable with individually large balances, then we cannot use negative confirmation. And then finally, last requirement, the auditor has no reason to believe that the customer will disregard the request. So only if these three situations are present, that's the only time we can use negative confirmation. And finally, class, when we use negative confirmation, we still have to complement or supplement it with alternative procedures because of its less reliable nature. Now, let's discuss the timing of confirmation of receivable. So when should we perform confirmation of AR? Now, generally, to obtain the highest assurance, we should send AR confirmation as close to the balance sheet as possible. In case we perform confirmation before the balance sheet date, also known as interim procedure, then we have to consider the effectiveness of internal control. Kasi let's say, you confirm the balance of the AR as of November 30 instead of December 31, 2022. So how will you validate the ending balance as of December 31, 2022? From the amount confirmed on November 30, you will have to add the sales during the period of December and deduct the collections during December to get the ending balance. So therefore, the controls over sales and collection process should be effective before you can even use interim testing. And then finally, what if there are non-responses? What are the procedures? So let's say you send a confirmation request. Based on your understanding of the business of the client, as well as past experience, the customer typically replies within a week. So after 1 week, certain customers did not reply, while other customers have already sent their reply. So what do you do for those customers who did not respond? You send a second request. So you follow up. So dear customer A, we would just like to follow up our previous confirmation, etc., etc. Then we'll give you until this date to confirm the confirmation or to reply to our confirmation request. So what if after sending the second confirmation, the customer still did not reply? So what will you do? Do you send a third confirmation? Not anymore. Okay? So kasi twice ka nang dinedma eh. So stop ka na. So after yung second confirmation. So after the second confirmation and still no reply, what would you do? You perform alternative procedures. So what are your alternative procedures? So you can test subsequent cash receipts. So kasi if the customer subsequently paid their balance, then that means the receivable is existing. Okay? So kaya lang, the problem is that sometimes the customer might pay for a current invoice instead of the invoice outstanding as of year-end. So if the client has no process or control to determine which payment is applied to particular invoice or receivable, then it will be difficult to test or to perform testing of subsequent collection. Another is to test sales invoices and shipping document. So because the idea is that if the client was able to bill the customer and send the goods to customer via the shipping document, then that means the receivable must be existing as of December 31. But the problem is, these are internal documents. So that is why at the end of the day, our priority is still to confirm the receivable before to perform alternative procedures. So alternative procedures, we just do this in case we cannot obtain assurance from confirmation of AR. So again, let's apply to our set of problems.